Hi, this is Ben Taylor of Brick Financial Management. Today I want to follow up on a video I did about a month ago titled, Are We in a New Bull Market? I guess I'll title this one, Are We Still in a New Bull Market? Some of the data has been coming in over the past month that I would say supports that yes, we've seen a bottom. That bottom occurred November of last year. And we are, although we're moving sideways in the market, this is the beginning of a new bull trend. And a couple of reasons I say that is because we're getting some dire information about the economy, about the way businesses are performing, about unemployment, and the market seems to just keep moving in that sideways but upward slightly trend. We had yet to go below 800 in the S&P 500. Today, February 13th, the S&P 500 closed at 826 or 827, around there. Still, we're hovering above that 800 level. Unemployment is at a height that we haven't seen since the 70s. We just had the worst quarter in GDP growth. I guess you can't even call it growth because it declined 3.8%. The worst performance in 25 years. We still have this $1 billion stimulus plan that we have yet to see what it's going to do. We still have the bailout, the TARP, in question. We don't know how we're going to spend the next half of that. So there's a lot of uncertainty out there. But as I said, the market keeps moving sideways. We're not going any lower. One figure I like to look at is, it was touched on slightly by Warren Buffett in an article he wrote in Fortune magazine back in 2001. He compared the market value of equities in the U.S. to GNP. And in that article he said if that ratio is 0.7 or 0.8, then likely stocks are undervalued and you do well by investing in stocks. Well, I took the market value of equities in the U.S. using the Wilshire 5,000 index, which encompasses all the stocks that are traded in the U.S., and compared that to GDP. It's a slightly different number than GNP, but still it gives you what you want. And if we took that number from November 20th of last year, we had about 7.5 trillion in market value, and GDP was somewhere a little less than 12 trillion, to give you a ratio about 0.6 or 0.7. So we are right where Warren Buffett told us that we would be undervalued, and you'd be doing well by investing in stocks. That to me says that that was the bottom. We still haven't reached that level yet. We're still under 0.8. I'm optimistic about where the market will be in another 5 years. It's no telling what the economy is going to do in the next 6 months. We just don't know. There's no telling what stocks are going to do in the next 6 months. We don't know. But I'm talking about 5 years out. From this point, I feel that 5 years we will see, if we look at a chart and we could fast forward 5 years from now, that chart will be going up. So the information I'm still getting tells me that we are in a new bull market, and I think, folks, at least what I'm doing is investing in the market.